So what happens when a company starts telling two completely different stories at the exact same time? Well, you get the puzzle that is GameSquare. On one side, we're talking missed targets, operational struggles. And on the other, a really bold, almost radical pivot into crypto. So when you're faced with that kind of dual narrative, how in the world does the market react? Well, not great. The day after their Q2 earnings call, investors sent a crystal clear message, pushing the stock down over 13% in a single day. I mean, that is a brutal response. But a number like this, you know it's never the whole story. It's really just the beginning. And that's exactly what we're going to unpack here. First, we'll look at the earnings report that really spooked everybody. Then, we're going to dive into this wild new crypto strategy they are betting the entire farm on. And finally, we'll try to figure out why these two stories feel like they're coming from two totally different companies. Okay, so let's start with story number one, the one that caused that big 13% drop. It all comes down to their Q2 earnings. And, to put it mildly, it was a pretty tough one. Right, so when you actually look at the numbers, that revenue miss is what just jumps off the page. Analysts were expecting almost $22 million, but GameSquare came in with just under $16 million. That is a 28% miss. They also missed a little bit on earnings per share, but a revenue gap that wide, yeah, that is definitely what gets investors' attention.
So what did management say? What was their explanation? Well, they pointed to a few different things. Part of it was macro stuff, tariffs delaying some big deals in China. They also said they chose to pull back on low-margin ads, the automated high-volume stuff, so they could focus on more profitable deals. But the biggest reason they gave, well, it pointed straight to the future. The company was already shifting its focus and its resources over to crypto.
And that explanation right there, that's our bridge to the second, much more optimistic story. Because while the market was freaking out about that Q2 miss, management was busy painting this picture of a radically different future, one that's built on the blockchain. Yeah, this quote from the CEO, Justin Kenna, on the earnings call, it says it all. Instead of getting bogged down by the miss, he totally reframed 2025 as a transformative year. And you got to notice that key phrase, on-chain finance. He was signaling that this isn't some little side project. This is the new centerpiece of the entire company. So what exactly is an on-chain treasury strategy? Well, to put it simply, instead of just letting their cash sit in a bank, the company is actively managing its assets, mostly Ethereum, right on the blockchain to earn returns, or what they call yield. Just think of it like putting your company's entire treasury to work in the world of DeFi. Now, their plan wasn't just, let's buy and hold some crypto. No, it was this whole three-pronged strategy. First, they're actively managing an Ethereum treasury, and they're chasing a pretty ambitious 8 to 14% yield on that. They're also using high-value NFTs to generate stablecoin yield. And this is the crucial part. They plan to use their existing media business to go out and land new deals with crypto-native companies. So to really get the sheer scale of this pivot, let's just set the stage again for a second. Remember this? This was the story of their core business in Q2, a nearly $6 million revenue miss. This is the picture that had investors so worried. But this is the picture management wants everyone to see now. This is the new GameSquare. As of August, their balance sheet is just dominated by digital assets, over $74 million in Ethereum alone. This isn't just dabbling in crypto, folks. This is a complete transformation of the company's financial core. All told, their liquid assets were sitting at nearly $100 million. And here's the real kicker. At that time, the company's entire market cap, the value of the whole company, was trading for less than that. So management's argument was simple. The market was completely ignoring this massive pile of digital cash sitting right there on their books. And get this, it was already working. In just 6 weeks, this new strategy had generated $19 million in unrealized gains. I mean, think about that for a second. The old business missed revenue by $6 million in a whole quarter. The new strategy made $19 million in just the first few weeks of the next one. It is truly a tale of two completely different companies living under the same roof. So, how does the company plan to connect these two different realities? How do they get from that Q2 miss to this profitable future they're talking about that's powered by crypto? Well, their roadmap gives us the answer. The first step is some classic belt tightening. They found another $5 million in annual cost savings, and those are set to kick in immediately. So this isn't some promise about the future. It's a direct, tangible step to fix the profitability of their core business, starting right now. And next, they're proving that the crypto strategy can actually fuel the main business. They've already signed a $2.5 million deal with a crypto client, and they've got a pipeline of 15 more behind it. This is that growth flywheel they talk about in action, right? The crypto expertise brings in new high-margin business. And on top of all that, they're even planning to use the yield from their treasury to buy back stock, which is a direct way to return value to shareholders. So all of this leads to some very confident guidance for the rest of the year. They're targeting profitability as soon as Q3, and they expect revenue to keep growing quarter over quarter. Basically, what management is telling the market is, hey, the turnaround isn't coming, it's already here. So this brings us right to the core conflict, the puzzle that every single investor looking at GameSquare has to solve right now. You've got these two powerful competing stories. On one side, you have this skeptical view. Is this just financial engineering? Is this just a company trying to distract everyone from a big operational miss with some flashy crypto promise that depends entirely on them executing in the future? Or do you buy into management's vision? Do you see a unique, scalable platform that's blending a recovering core business with this powerful, high-yield crypto engine to create a whole new kind of company?
And ultimately, that's what it all comes down to. Was that 13% drop the smart money sniffing out some major operational risk? Or was it the market completely missing the bigger, transformative picture that was really just getting started? Only the next few quarters are going to tell us which story actually wins out. But that battle, the battle between those two stories, is what makes GameSquare so absolutely fascinating to watch right now.